focus of what blockchain crypto represents, this is just kind of one of those little cycles, if you will, in the whole scheme of things.
And from what I'm understanding, you are a bull when it comes to the blockchain. Tell us your thinking why, and how does that translate into specific investments?
Yeah, so ultimately, when you think about blockchain, what we're really doing here is we're creating an entire new settlement layer for all kinds of transactions. And we're doing it in a very decentralized way, right? So instead of having a bank clear the transaction or a brokerage firm clear the transaction, what blockchain does is it uses a network, and everybody on that network is helping clear the transaction. So early on, we were like, man, does this really work? Right? Can you do it and do it in a trustful way? And what Bitcoin really showed is, holy cow, we can do this. We can move money all over the realm, value all over the world. And so now I think what's happened is all of the bigger institutions, bigger financial players, they're all jumping in saying, wait a minute, I've got to use this technology. Our little fund, we got this little venture fund, it's tokenized. Well, what the heck does tokenized mean? All it really means is that we have a fund and its digital shares are traded on a blockchain. And so anybody in the world can kind of, trade those funds and provide liquidity. Well, now you got, right, and I used to go out and talk about this. People are like, what the heck is that, right? Well, I don't know if you guys saw, but KKR just announced that they're tokenizing one of their big healthcare funds, right? So you can see, the big institutions now kind of woke up and said, wow, this is key. Right, this is a key piece of technology.
I got to tell you though, I'm so skeptical, and I remain skeptical of this because in my everyday life, despite the fact that blockchain technology has been around for a dozen years, we're not interacting with it yet daily. We're not even. I don't know if I've ever interacted with it.
Why aren't we? That's a great question.
Well, you got to look at it this way, right? So all tech markets go through phases. They start off with the visionaries, then they move to kind of the early adopters, and then they move to kind of the mass market or the early mass market, and then they become mainstream. And, what's interesting is blockchain is playing out exactly the way the internet did, right? I'm a .com guy, right? I actually started the very first financial service on the internet back in '93. And I used to go around and have that same conversation. Man, I don't interact with the internet. And where are we today? So it's the same kind of mentality,
right?
Hey,
Rob,
it,
I have to tell you, Tim and I, because Tim does so much on the crypto world, and whenever you bring up blockchain, he like rolls his eyes in the back of his head. But we're sitting here saying, why do a digital fund and then buy, and tokenization where you buy, an interest in that digital fund on the blockchain? Why not just issue it as a share and buy a share?
Liquidity, global liquidity, right? So now I'm on a blockchain. Now I have a digital share, and now that share can be freely traded all over the world through a variety of exchanges and venues. And the traditional finance world talks about settlement, right? And T+1. In blockchain you talk about T+ seconds. Right. So and so that's what we're talking about here.
But you've got to get Rob, you've got to get everyone on board with this, including regulators. We only have 30 seconds left.
Right.
How do you do that?
Yeah. Well, it's happening now, right? And it's happening now. Regulators are coming on board. A lot of the bigger financial institutions are coming on board. You got, major firms like Fidelity, KKR tokenizing a fund. State Street Bank, one of the largest custodians in the world, right? They announced, hey, we're going to do digital asset we're looking at this space, right? So I think it doesn't happen overnight. It happens, over time, right? But it certainly is disruptive.
All right, we got to run. Hey, have a good weekend. Rob Frasca, managing partner at Cosimo Ventures, a tokenized venture capital fund investing in early stage blockchain projects and opportunities. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So is this on your decliner list?
This is perfect timing. How could it not be? We're talking Nike here. Shares down close to 12%. It's having its worst day in more than 2 years at this point. Unwanted inventory.
Unwanted inventory. But in what? And we're going to get into those particular details in just a moment with our own Poonam Goyal of course, Bloomberg Intelligence. In the meantime, once I find my words, he's never at a loss for words. Here is Doug Krisner.
I wish I could help you, Carol. We're very near session lows right now. Sometimes I have difficulty doing the very same thing. We've got about, 28 minutes until the closing bell. We are slightly off the worst levels of the day. Final day of the third quarter, and the S&P is down about 0.7%. Let's touch upon some of the stocks that are showing weakness today. We'll begin with Carnival Corp. Class A shares right now off more than 21%, near the lowest point since 1992. Carnival is the world's largest cruise operator. It reported disappointing occupancy for the third quarter. That ended August 31st. Also, a lot of weakness today in Nike shares, down 12%. Seems as though a glut of unwanted merchandise eroded the sportswear maker's profitability. And Boeing shares weaker by 2.7%. It seems as though the 737 MAX is at risk of missing a key deadline later this year. The company was notified by the FAA that the agency has approved less than 10% of the required safety assessments submitted by Boeing for the MAX 7. This has the potential to force Boeing to carry out an expensive and complex redesign of the aircraft. S&P, as I mentioned, down about 0.9%. We have the Dow coming in by about 1.2%, and the NASDAQ comp off about 0.8%. I'll take another look at market action for you in about 15 minutes. I'm Doug Krisner. That's your Bloomberg Business Flash.
Perfection. Doug Krisner, thank you so much. Not perfection. Shares of Nike, because they are down about 12% today. Down in a big way. As you said, I think it's the biggest move, right, to the downside in about 2 years.
Yeah.
So should we talk about it?
Let's talk about it. We got Poonam Goyal with us, senior analyst for e-commerce, athleisure, off-price, retail, and more. She, of course, is with Bloomberg Intelligence, joins us on the phone from New Jersey. Poonam, I know that you were on the call yesterday. You saw these numbers as soon as they came out. Now you've had some time to digest them. Just how ugly is it for Nike?
It's ugly in the near term. Okay, so I think that's key here. I think in the near term, the inventory issue with inventories up 65% in North America is a big deal, and it will crush gross margin, sending them down 400 basis points in the fiscal second quarter. But, outside of all of this, I do think there was some positives. Footwear is still strong. Demand is strong. It's really an inventory and China story at the moment, where those are the two areas that they're struggling.
Well, that's what, I have to say, Poonam, I was listening to you. I think you were on with Tom and Paul, I think, this morning on Surveillance, and you said it wasn't sneaker inventory. Was it clothes inventory in particular?
It's apparel. Apparel is where they have too much inventory, not on the footwear side.
Well, and that's what we have to remember. I mean, when it comes to it in terms of, this is a huge company. They sell a lot. It's such a well-known brand. Is sneakers the bread and butter when it comes to top and bottom line?
It's not. It's pretty balanced, their portfolio. So The reason that you're seeing margins go down because of apparel means that apparel has significant contribution, right? So I wouldn't say that. But I think what you can take away from that is the footwear business is doing better, partly because you have to keep in mind the new launches that they have aren't really leveled up, meaning they don't buy millions of those items, right? So the new sneaker launches in limited edition, and they sell out pretty fast because of the scarcity around them. So footwear inherently has better inventory momentum built into it than apparel.
So, Poonam, if it's more of a story when it comes to a glut of apparel, less of a story about footwear, why are we seeing other companies today taking a hit as a result of Nike?
I think it's a supply chain issue to a large extent, right? The reason that there's a glut of apparel is because they ordered all this inventory, let's say last year, early this year, and it was supposed to come in March. So let's say spring, summer apparel was due in March, but because of port congestion, that inventory is arriving now. And you can't sell a pink tank top in the fall. You just can't, right? So there's a piece of that inventory that's just not relevant today.
All right, so I do wonder when, you've got to assess this and do figure out, how far does it go within the retail sector? I mean, when we think about the rest of the retail sector, as we get into the all-important holiday season, right, so important to so many bottom lines, are there other, retailers, though, that we should extrapolate out to as a result of this Nike news?
Yeah, I think it really extrapolates to all of retail. Okay. There is an inventory problem. The demand is mixed. For some retailers, it's still strong. For some, it's not, as trading down is happening from what we hear. So we think we're cautious going into the holidays. We're waiting to see, do we hit a recession? If so, how deep is that recession? I think those are the biggest concerns on investors' mind, because in Nike's forecast, they have built somewhat of a slowdown, but we don't think a deep recession is built into the forecast.
Can I ask you, are we over the supply chain problems when it comes to retail?
We're close to it. I think this is it, unless something, happens again, or factories shut down, or there's port congestion. But for now, the inventory that was ordered 6 to 9 months ago is pretty much landing and is there for them to clear.
Poonam, what else do we need to keep an eye on when it comes to retailers, when it comes to economic data, to give us a good idea of whether or not we are going to see a slowdown, specifically when it comes to retailers and apparel, like your world?
Yeah, I'm closely watching travel, leisure spending.
Interesting.
Because I think those sectors have been doing very well as of recent, despite the inflationary headwinds. So I think if you start to see weakness in luxury and travel, hotels, etc., that could be a warning signal that the consumer will slow.
Is there anything that post those Nike results, post all of the commentary from the company, post analysis from outside analysts, from your own internal metrics, that you're still like, I'd love to know a little bit more about this?
I think it's really the macro. I mean, it's so unpredictable, and I think that's really what's going to determine, especially for the back half of the year, what happens to results.
All right. We're going to leave it on that note. Yeah, it's going to be interesting to see, and it does feel like consumers are still out there spending. We'll see with the holiday season, but we shall see. Feels like we're all on tenterhooks. Poonam, thank you. Have a great weekend. Poonam Goyal, she's senior analyst for e-commerce, athleisure, and off-price retail at Bloomberg Intelligence. Read that, TJ Maxx, maybe? I don't know. On the phone in New Jersey.
Well, I'm looking at some other companies that are getting a hit today as a result. Under Armour shares, Carol, down 9.2%. Lululemon down 6.3%.
Wow.
Yeah, it's really hitting the entire sector.
Yeah, exactly. Really important to watch. And, you got to watch those consumer spending numbers. We got to read on it today. We're going to watch those job numbers next week. But, consumers are still out there spending. I
know. Like you said, Carol, it's kind of confusing.
This is why the Fed is like, okay, I'm going to have to keep, raising rates. All right, you are listening and watching Bloomberg Business Week on this Friday. Carol Massar along with Tim Stanovic. It is time for another check on world and national news. It's over to Denise Pellegrini. She's in our newsroom. Hey, Denise.
Hey there, Carol. Well, Hurricane Ian causing storm surge and flash flooding after landfall in South Carolina, and President Biden says the damage is already done almost unfathomable.
The situation in Florida is far more devastating. We're just beginning to see the scale of that destruction. It's likely to rank among the worst of the nation's and the worst in the nation's history.
And Biden sending the National Guard and promising the federal government will bear the cost of rescue and recovery. Rebuilding could take years, though. Governor Ron DeSantis.
The power is a big issue. There are people that are working. I think Lee and Charlotte have about 15% restored. There's going to be able to be some more restored likely in the relatively near future.
And Bloomberg News says some parts of Florida, though, could be without power for months. Disney, by the way, reporting all 4 Walt Disney World theme parks are open. President Biden calling the leaks on the Nord Stream pipeline in the Baltic Sea a deliberate sabotage. NATO Secretary General Jens Stoltenberg calling for an investigation.
We support also the efforts of, which are ongoing efforts of investigation to reveal the facts and to determine who was behind these attacks.
And Stoltenberg speaking there after Russia earlier today annexed Ukrainian territory. And I know it's a little early, markets are still open, but let's talk about the weekend because Saturday Night Live is coming back this weekend for its 48th season, guys. Leading the lineup and guest hosts is Top Gun Maverick star Miles Teller, and musical guest Kendrick Lamar. Global news, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists. I'm Denise Pellegrini. This is Bloomberg.
Thank you so much, Denise Pellegrini in the Bloomberg Newsroom with World and National News. Watching the markets, headline just crossing the Bloomberg. NASDAQ 100 extending losses to fall below the June 16th intraday low. That was a low that we saw on stocks in general. That's when we saw the VIX moving up.
Wasn't it closed,
we saw pressure on stocks.
Was it closed?
That
wasn't a closing,
no.
that was intraday.
Well, it's because, yeah, right. But still.
No, but I mean the June 16th one that we're talking about was an intraday low, right?
Yeah.
Yeah, okay.
What's your point?
Yeah. I don't know. I'm trying to see. Glasses half. It didn't close that low. I'm saying there's still 18 minutes left in the trade.
Can we talk about Apple?
Yeah, let's talk about Apple.
Let's talk about Apple.
Not a good story.
It's what?
Not a good story.
No. The headline on it, Apple's tech supply chain shows difficulty of dumping China. In other words, it's not easy to pull your supply chain out of a market like China.
I know, especially if you spent years building it up and also selling a really important country where you sell products, a really important region. COVID-0, deteriorating U.S.-China relations, pressuring U.S. firms. Chips are in the crosshairs, though, as Taiwan-China tensions increase. As our own Debbie Wu, Peter Elstrom, and Bryce Bashuk write, breaking up with China is hard to do.
Oh, my God. The Cupertino, California-based company already started producing some iPhone 14 models in India in an earlier-than-usual move for new models, and Apple's largest supplier, Foxconn Technology Group, recently agreed to a $300 million expansion of its production facilities in Vietnam.
You know what's interesting, though? Apple has been manufacturing older versions of its iPhone in India for years.
Yeah.
They were doing that even before the pandemic. One thing that we've heard, and we've talked to CEOs about this, Carol, is the idea of nearshoring and bringing the manufacturing of products closer to home, because not just because of COVID, but just because of tariffs.
Well, and also when you look at the climate and climate change and carbons, like shipping things around, like is it cheaper, especially when there's going to be more pressure on companies. Bloomberg Intelligence estimates it would take about 8 years to move just 10% of Apple's production capacity out of China, where roughly 98% of the company's iPhones have been made. Wow. This is not easy. Incredible read. Check it out at Bloomberg.com. You are listening and watching Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Final trading day of the third quarter. We are limping toward the closing bell. It is 48 past the hour right now with the S&P 500 near the worst level of the day. We're down about 0.9%. Generally speaking, we're seeing weakness in consumer discretionary. Utility stocks are down, so too the energy group. Apple shares are down for a second day after Bank of America yesterday warned of weak consumer demand for those popular Apple devices. Over the last 2 trading days, Apple shares are down by nearly 7%. We've got the Dow off about 1.1% and the NASDAQ comp weaker by about 0.8%. Shares in Nike also showing some weakness. Shares are off nearly 12.5%. We were talking earlier about this glut of unwanted Nike merchandise eroding the company's profitability. And Carnival Corp shares right now off more than 22%, their lowest level since about 1992. It's because of disappointing occupancy for the third quarter. The company reporting a rate of 84%, but the street was looking for something closer to 86.5. We've got U.S. rates moving up across the curve today. 10-year Treasury now at 3.81%. I'm Doug Krisner. That is your Bloomberg Business Flash.
Hey, Doug, thank you so much for that update. Really do appreciate it. It is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. A rush to dump UK government bonds following a botched budget announcement forced a dramatic intervention by the Bank of England this week. A clearer indictment of economic mismanagement would be hard to imagine. Having started so calamitously, what can Britain's new Prime Minister Liz Truss do to repair the damage? The best advice for Truss comes down to this: stop trying to be exciting. This means coordinating quietly with, and if necessary, deferring to, officials at the Bank of England who are responsible for curbing inflation and restoring financial stability. The perception that the Treasury and the central bank are at odds over macroeconomic policy is fatal to both aims. Many Tories must be missing Truss's predecessor, Boris Johnson, the leader they belatedly sacked for serial mismanagement. If that doesn't induce Truss to reset, what will? This editorial was written by the Bloomberg editorial board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just got about 9 minutes left in today's trading session, getting ready to wrap up Friday. So the day, the week, the month, and the third quarter. And we see stocks really taking another leg down here. So we're probably going to finish, at least at this point, it looks like, at our lows or just off our lows for the session.
Let's get into it with Lisa Erickson, head of the Public Markets Group at U.S. Bank Wealth Management. Lisa, this afternoon, joins us on the phone from Minneapolis, Minnesota. Lisa, how are you?
I'm great, thank you.
You're great, despite the fact that the S&P is down close to 25% so far this year?
Well, good point. Investment-wise certainly has been
We're a tough crowd today,
sorry.
Lisa, so sorry about that.
As soon as I asked that, Carol just closed her eyes. She just couldn't believe it was coming out of my mouth. I'm sorry, Lisa.
No, that was great, Tim. But no, you're right. From an investment standpoint, it's been really a very tough year. And not only have the equities been down, but our traditional diversifier, really fixed income, has been difficult as well. And so it's really been a double whammy. And as we look at the forward outlook, we continue to be cautious. Certainly some of those factors that have been driving both bonds and stocks to lower levels aren't going to seemingly reverse anytime near soon. And that is really two factors. So one is obviously the price pressures that we've been seeing here in the economy. And then secondarily, because of that inflation, really what's going on with central banks in order to try to tamp down those inflationary levels. They obviously are putting in some monetary headwinds.
Couple of stories I want to bring to your attention, both coming from Bank of America. on our Joe Weisenthal just tweeting out a story by our Jill Shaw. The Fed rate hikes are pushing the credit market towards dysfunction. B of A saying that the credit stress is nearing a critical zone. Fed needs to slow down hikes or face difficult fixes, they say. At the same time, B of A strategists are saying that they see an equity route forcing asset liquidation, and they're looking at, that how the NYSE composite index, so we're talking stocks, depository receipts, real estate investment trust, has broken multiple technical support levels, including its 200-week moving average, and how this is a pretty significant thing. What do you think of all of that? It's pretty negative and a pretty unnerving, if you will, when it comes to what investors have to think about.
There are a lot of tough factors in play, and certainly while we don't give up hope that, hopefully again we'll see a moderation in these factors, because we do have not only the Fed, but also central banks globally tightening and really trying to also tamp down those inflationary pressures in their individual economies, that does run the risk of, again, over-tightening, simply because monetary policy, while we're already starting to see some of the effects of that, does run on a lag. And so while we see sectors, for example, now like the housing market slowing, you will continue to see some of that runoff continue to affect other sectors as we go forward. And to your point, that is really now affecting market liquidity as well. And when we look at technical signals, we are seeing some of that downward pressure and lower sentiment as well.
Are you seeing things that tell you that there's financial distress, credit market dysfunction, and that's something that could lead to some kind of breakdown within the financial markets?
So far, our signs are really more showing on a technical basis just the poor sentiment. Okay. In terms of actual underlying distress yet in the credit market, where it would often show up first, we are not seeing that. So when we look at typical fundamentals, we are still seeing, even for lower rated bonds, what people will often call the high yield part of the market, we're not seeing yet, again, those signs of emerging concern, and most of the default forecasts are still pretty moderate. So the good news then is we're not yet in the danger zone, but we want to obviously continue to monitor that because, again, depending on how quickly inflation comes down, that could have more or less impact on ongoing consumer spending and therefore corporate margins.
How quickly do you think inflation will come down? We got some, unfortunately, stronger than expected numbers this morning.
It's really hard to say. It likely will take some time for those inflation numbers to come down, but a lot of that rate of decline is going to depend on how quickly those supply chains continue to bounce back. And while we still see signs that they are improving, one of the valid theories that is floating out there is that because really what we had in this scenario was not only the pent-up demand, but also these unusual supply constraints. To the extent we get relief on the supply side, that actually could bring down inflation faster than people
that seems
expect.
To be happening. I mean, Carol, what did Poonam say earlier? She said that we're almost out of the woods when it comes to some of the supply chain constraints on the retailers.
Right, which has been a real problem in some of, certainly our macro story when it comes to inflation.
Absolutely. So while, so far we're seeing some back and forth even in today's personal consumption expenditure inflation numbers, where actually it wasn't as positive news, where inflation was still running a little higher than people expected in this most recent report. Again, there is a possibility that we're going to see some nice declines over the next few quarters. So we're all obviously really going to be watching those numbers.
All right. So just got about a minute or so left here. So thoughts for investors. Here we are going to kick off the final quarter of the year on Monday. Last quarter of the year can often be a good one for investors, but it also can be a tricky one as well. But we also have midterms. So what are your thoughts in terms of positioning?
We're still cautious. So we're advising our clients to be relatively underweight in equities, both U.S. and foreign developed stocks, and relatively overweight in shorter-term fixed income, and actually another asset class called global infrastructure. And the reason for the emphasis on the latter two areas is really because they tend to provide higher levels of income than just straight out equities. And that's obviously a very nice feature in a period where there's more economic uncertainty, where you're uncertain about the level of growth that may be coming forward. To have that income in hand from diversified sources really can provide some nice ballast to the portfolio.
All right, we're going to leave it on that note. Lisa, thank you so much. Have a great weekend. Lisa Erickson, she's head of the public markets group at U.S. Bank Wealth Management, on the phone from Minneapolis, Minnesota. We say that with just a few minutes left in today's trading session, folks, and we are seeing your major equity averages take a leg down here in the last few minutes of the session. So what does that mean? The S&P 500 is down about 1.4% at 3,588. Dow down 1.6%. NASDAQ down about 1.5% as well. 157 points to the downside. We're going to join our TV colleagues in just a moment, but really, take a look at what's been a very interesting quarter. We know the Fed is out there. Their drum beat is loud and clear. Higher rates are to come. Watching the rest of the economy as well, but no doubt about it, right, Tim?
All right, and more economic data next week before we end up getting to earnings, which happen in the middle of the month, of course. But let's join our TV crew.
All right, time to head over to TV.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovic. We welcome our audiences across Bloomberg Television, across Bloomberg Radio, as well as on YouTube. A look at the markets right now, which are selling off into the closing bell here at the lows of the day, Carol. And of course, we've already talked about the fact that we're back down to the lows on a year-to-date basis.
Yeah, absolutely, right? We've seen this number before, certainly here in 2022. We've got some volume, too, behind some of that selling. I was looking for some upside here. You know what was one of the best performing stocks, you guys, in the third quarter? Netflix.
Etsy and Netflix. That is wild.
Up 35%. It's still down a lot for the year, but I just thought that was kind of interesting.
But a
All
word
right,
of
here's a bummer.
A word of caution. At least that's what Lisa Erickson, who's head of public markets at U.S. Bank Wealth Management, says. Even for the fourth quarter, she's advising clients to be underweight in equities, at least here in the U.S., in developed markets as well. But Taylor, she's saying that they are advising clients to be overweight in short-term fixed income.
That's interesting because short-term fixed income, we'll exclude money markets for now. Yeah. We'll call that cash. But, a 2-year yield, Caroline, we've been talking all about it. You can get 4%. Yeah. That great article that we just heard from Katie. Cash, it is an own asset class.
And just all because of the dollar. U.S. dollar strength has been the story of the quarter of the entire year. And that, of course, is why we see global markets fare so badly and, indeed, why you see basically every other asset class fare so badly, Romaine.
Yeah, we talk so much about the volatility. We go from incredibly broad-based rallies to incredibly broad-based sell-offs here. I think where we're going to end the month and, of course, end the quarter here is kind of telling, I think, of where sentiment is. The Dow Jones Industrial Average going to finish the day down by about 1.6%. 28,758. That's actually your headline right now on the Dow Jones Industrial Average. It was wait for these numbers to settle. A lot of talk about these key levels. The S&P 500 going to finish out the quarter below 3,600. It's down about 54 points on the day. 1.5% drop on the day. 3,586. And the NASDAQ Composite right now around 10,000 and change. 162 points below where we were to start the day, down about 1.5%. The Russell 2000, which was an interesting story today, and it actually rallied pretty hard, but now giving up all of those gains here into the close. Going to finish the day basically down a fraction of a percent.
Just taking a look at the NASDAQ 100 here, Romaine, and 9 stocks down for every one that gained. So definitely a negative tone, and you saw that also, Taylor, play out in the S&P 500.
Yeah, Carol, we're going to do something a little bit different today. I know that typically we take a look at the sectors on the intraday basis, and it is still exciting, but frankly, no one cares. We really want to wrap up the quarter. So that's what we're going to do here. And as you mentioned, we've been talking about discretionary. You mentioned sort of Netflix and Etsy, right? The best performers this quarter. Discretionary, the consumer, for now, still hanging in there. You're up 4.2%. Energy as well, I think, was an Enphase and maybe Constellation Energy, some of the other big outperformers this quarter on a stock basis. Energy is still up 1.2% and still the best performer for the year. I bring you down to the bottom. Real estate is off 12%. And Carol, this is, of course, all the moves from the Federal Reserve to maybe, in their view, correctly slow down the strength of that housing market. So you're seeing that within some of the housing stocks as well. Then you're getting some staples as well that are off about 7%, again, sort of highlighting the inflationary pressures that the Federal Reserve is tackling, and this chart really highlights that.
All right, guys, I got to say, it was really tough to find individual gainers with specific reasons behind it, but Twitter was certainly one, and thank you, Ed Hammond, for that great story talking about Hollywood super agent Ari Emanuel attempting to pave the way for a potential settlement between Elon Musk and Twitter to get that $44 billion takeover deal, figure it out, get it done. This is according to folks in the know. So Twitter was up about 2.8% in today's session, and we did see Twitter pop into the top among the S&P 500 gainers. Micron Technology, man, it was up about 4% at its highs, still holding on to about a 0.2% gain here at the close. We talked about it after the closing bell yesterday, that first quarter adjusted revenue revision. That was a big one to the downside. But analysts, some of them noting that the company's production and CapEx reductions get the largest maker, U.S. maker of memory chips, quote, one step closer to its trough, offering potential relief for semiconductor stocks that have taken, as we all know, a beating this year. This one, a small cap, don't judge me, don't beat me up, but the ticker is ARVL. It's an EV startup Arrival, surging today. It was up as much as almost 17%, still holding on to about a 2.5% gain here at the close, surging after it said it's in talks to raise capital to build and sell its products in the U.S. Small market cap, and it did.
I'm sorry, is that an 81 cents stock? So this was a stock, I mean, we're talking about Arrival?
I know, Arrival.
And so, right, so this was like an $11 stock a while ago, and it surged.
Remember, Tesla was really kind of small cap at one point, right? Maybe.
Okay.
It
wasn't about time horizon, I suppose.
I'm just gonna say it wasn't.
So was Amazon.
It wasn't easier. It wasn't easy to find
You gotta
gainers
go
today with
where
some
you can find
fundamental
them.
news behind it.
Okay, we'll talk
I
after the
said,
show.
don't judge me.
Well,
I'm so
Carol,
glad
you know
it's
me.
Friday. I know.
Okay.
I know. I'd be wondering what's wrong if you didn't give me a hard time. Tim, it's all yours.
Well, I had the easy job today, once again, finding decliners. We got to start with Nike. Shares tumbling today the most since 2001. A glut of apparel, gross margins getting hit. Look at that, down 12.8% on the day. You know, we spoke to Poonam Goyal over at Bloomberg Intelligence. She said it's ugly in the near term, but it's an inventory in China story, and there were actually some positives. She pointed out to footwear as a positive there. At the same time, we did see Lululemon, Under Armour, Foot Locker, and more falling in sympathy. And then Carnival Corp falling the most in more than 2 years, 23.3% today. The company said that its first quarter bookings are below the historical range and at lower prices due to the use of travel credits. And this is a small company, but I thought the commentary from the company's CEO was really interesting. Rent-A-Center, it's about $1 billion market cap. It came out with numbers yesterday. And the company's CEO said that the current economic conditions have continued to deteriorate over the past few months, and it's affected both retail traffic and customer payment behavior.
Yeah.
And the recent inflationary conditions have been especially challenging to our customers, though they're confident in the long-term resiliency of the business, even during economic downturns.
Well, investors aren't. I mean, you see not only the equities, but I was taking a look, Tim, a little bit earlier at
the bonds, right?
Yeah, they're back down around 78 cents or so. And the idea here that Taylor seems to be in denial, which is that there are cracks in the credit market.
Carol, can't catch a break.
Yeah.
I know.
Let's go cross-asset. Can I bring your attention to a wild GMM global macro movers? I do this for quarter to date because there are just two areas of green. It is your strong US dollar strengthening another 6% on the quarter. That's 5 straight quarters of gains for this US dollar. And therefore a plunge in the likes of the Canadian loonie, the dollar, a Canadian dollar that of course weakens because oil sells off. Your New Zealand dollar weakening by 10%. Don't even get me started on where the British pound that actually of course has rebounded somewhat from its recent sell-off. At one point was down, 20% on the year and some 12% on the quarter. But we are seeing of course this real story of a dollar strength and indeed some natural gas movements that we've of course seen hot on the heels of the US and in terms of the weather, in terms of the extraordinary stories there, but also still the geopolitical story for the quarter going forward remains so murky when we have once again that dialing up of tensions between Russia, Europe, Russia, US, Russia with the West at the moment to do, of course, with the annexation of Ukraine. WTI crude, though, this story of inflationary pressure going forward is an interesting one when you do have WTI crude slumping 18% over the course of a quarter, iron ore, metals selling off as well, and don't even get us started on sovereign bonds that sees, of course, the gilt yield in 2-year up, 234 basis points. This, of course, is a story of crisis that in large part is to do with the US dollar, but also of the UK's own making, Taylor.
I mean, you're having huge jumps as well here for the quarter. The focus again on the front end of that yield curve. Romain is quoting changes in bond yields in percent. So Romain, for you, a 2-year bond yield jumps 43% on the quarter. 129 basis points is where we see a 2-year yield from June into what we are now. And that movement is all higher. You're looking at significant quarterly gains now of yields just continuing to rise.
Yeah.
A 10-year yield as well that on the quarter jumps another 80 basis points. And remind me, all the other quarters were jumping 60 and 70 basis points as well.
Yeah, and I mean, look, we want to go back to corporate credit. Taylor and I have been having a very spirited debate here about whether there are cracks there. And look, this may not be a systemic issue. In all seriousness, though, I mean, we talked a lot about, of course, how that Tellurian deal broke down, the Citrix deal broke down, then what was the one a little bit earlier this week?
Brightspeed.
Thank you, Brightspeed. And now I was just looking at the Bloomberg terminal and a great story by Lisa Lee, really talking about the next big deal, which is the Nielsen Holdings deal, which has to close by October 11th, and the idea that the bankers could be on the hook for about $8.35 billion worth in loans if that doesn't get done by that time. So there are some individual stories here. Whether it's systemic or not, I think that's going to take a long time to be proven out.
Well, speaking of individual stories, you got Dow Jones reporting about Stanley Black & Decker cutting about 1,000 finance jobs. Like, so we continue to see, I think about a week from now, we're going to be talking about that monthly jobs report, the latest read on the U.S. labor market. Does all of this start to, kind of filter into those overall data points? So we shall see. All right. Romain, anything else before we run?
No, I'll let you finish without interrupting. Happy Friday.
I'm going to hide under my desk after I'm done here. Guys, have a great...
Isn't it wine time that you like?
I think for us it is.
She's got it right there under the desk.
All I got is water and a banana over here. All right. We got to run. Guys, have a good weekend. We will see you again. That's going to wrap for our Beyond the Bell on radio, TV, YouTube, our cross-platform simulcast. Wrapping up the markets for the week, for the day, and for the quarter. We'll see you again, same time, same place on Monday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week right here on radio, on YouTube. What's interesting, I love technicals, and I was just pulling up the S&P 500 RSI. It's called the Relative Strength Index, and it's showing the S&P 500 very, very oversold. Typically, you bounce off those oversold levels, but it doesn't necessarily move to the upside. And if you take it back to kind of mid-August, there's a couple times where it's been close to or oversold, and it goes up a little bit, but then it comes down again. So it does show that we kind of continue to kind of trend lower here. And you do wonder how much more lower we go.
An important superlative, S&P 500 falling 9.3% in its worst monthly drop since March of 2020. Let's get over to world and national news. We got Denise Pellegrini standing by here in the newsroom. Hey, Denise.
Hey there, Tim and Carol. Well, Hurricane Ian is over South Carolina, bringing flooding to the state and to surrounding regions. National Weather Service Director Ken Graham, though, saying particularly for those Floridians who are near rivers, believe it or not, it is going to be a long time before Ian's flooding actually recedes.
That water doesn't drain very fast, so some of those rivers could stay at flood stage, and several locations actually record flood. Could be that way for days, even more than a week.
Meantime, in Washington at the White House, President Biden promising to do whatever it takes to get people in Florida help.
I just want the people of Florida to know we see what you're going through and we're with you. We're going to do everything we can for you.
And Biden also promising the federal government will bear the cost of everything. Biden, meantime, promising the U.S. will defend every inch of NATO. President commenting after Russian President Vladimir Putin today annexed parts of Ukraine. And Republican lawmakers are asking the State Department to save documents related to U.S. diplomats in COVID quarantines in China. Bloomberg's Nathan Hager reports.
Bloomberg News has seen a letter from Congressman James Comer and Michael McCaul to Secretary of State Antony Blinken. The lawmakers say 16 diplomats and their family members were held against their will in China and may have been pressured to turn over intelligence. They base that on whistleblower correspondence and reporting in the Washington Post. A Chinese foreign ministry spokeswoman says any accusation the diplomats were pressured is, quote, groundless and preposterous. In Washington, I'm Nathan Hager, Bloomberg Radio.
All right, thank you, Nathan. And global news, 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts, I'm Denise Pellegrini. This is Bloomberg.
All right, Denise, thank you so much. Denise Pellegrini. So you mentioned you went down a rabbit hole and read the Business Insider putting out all of the juiciest private texts between Elon Musk and his billionaire buddies discussing his plans for Twitter. This is what been released as part of the court, I guess, case.
Yeah, I mean,
disclosure.
I love this. I mean, who doesn't want to read, private text messages between Elon Musk?
It's like reading somebody's diary, isn't it, to some extent?
Well, it's really interesting. So you have venture capitalists and early, tech wealthy people like David Sachs who have texted him. You got Joe Rogan, of course.
Reid Hoffman.
Reid Hoffman of LinkedIn fame, of also venture capital fame. Sort of early PayPal mafia guy as well. Sam Bankman-Fried of FTX was trying to get in on it. And it's just really interesting seeing the way that, Musk replies and that he's doing it himself, Carol. I mean, I don't know about you, but I would have someone else reply to these text messages. If I were that wealthy.
Well, come on.
I can't be bothered.
Do you not know who Elon Musk is?
Do you know how busy I would be doing other things?
But do you know how much he... Okay, so wait a minute.
Okay, talk about it
So
a little
notable in Musk's tests, as Tim said, the various people he solicited for either financing for the $44 billion deal or advice on running the company. Many others reached out to him to offer their help, thoughts, or sometimes money. David Sachs was invited to invest, Reid Hoffman too, eventually suggesting he could put $2 billion toward a deal. Mark Benioff, founder of Salesforce, shows up to talk about a new operating system for Twitter. What else? Who else?
Okay, here's a really fun one. So the banker Grimes, not the singer Grimes, the banker at Morgan Stanley Grimes, tried to connect Elon Musk with Sam Bankman-Fried of FTX. He's a billionaire many times over. He said, and this is that he could put $5 billion into Musk's deal to buy Twitter. I'm reading this from Business Insider. This is so funny, Carol. Quote, Musk disliked Grimes' text explaining briefly who Bankman-Fried is and suggesting a meeting, but wrote of a meeting, quote, so long as I don't have to have a laborious blockchain debate. I really saw that one.
There's also Gail King, I guess, who was reaching out, trying to get him to do a sit-down interview. The first was on April 6th. She's like, have you missed me? Are you ready to do a proper sit-down with me? It's a must-read. Have a glass of wine and read it tonight.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Final day of the third quarter, the equity market drops and we close at session lows. I think it's fair to say that some portfolio managers were making last-minute adjustments to their holdings, but you also have to consider the Fed's role in this. The Fed's favorite inflation metric picked up steam in the month of August. That personal consumption expenditures price index, the PCE, gaining 0.3% from July. It topped estimates, and that only exacerbated the concern about an aggressive Fed committing a policy mistake. Dow Industrial Average today off 1.7%. The NASDAQ comp and the S&P each down today by 1.5%. Yesterday, we were talking about the weakness in Apple after Bank of America warned of weak consumer demand for Apple's popular devices. Today, Apple shares were down, and over the last 2 trading days, shares in Apple were off nearly 8%. I'm Doug Prisner. That is your Bloomberg Business Flash.
All right, Doug, thank you so much. You are listening to Bloomberg Business Week. Carol Master along with Tim Stenowik. I'm trying to get a tweet out because I just got a great picture.
Mine just sent, Carol.
Because it's classic Matt Miller. Our next guest really needs no introduction. Let's head to the Midwest, where our Bloomberg News radio and TV anchor, car aficionado, car lover, really to all things fast, can wear a shiny leather jacket like no other. Put those sunglasses back on, Matt Miller. And are you on a green screen? Because what the heck is behind you?
No, it's a gorgeous day here in Detroit. I'm at the Milford Proving Grounds. They have 4,000 acres, over 150 miles of track, and 150 buildings behind me, just to test out the newest, the latest, the greatest vehicles that they have in production. And I spent the day driving around in the new Silverado EV. It's an electric version of their Silverado pickup truck. It has 664 horsepower and over 750 pound-feet of torque with a 400-mile range.
But Matt, it's an EV. Do you hear the revving behind you? Are we getting any kind of rev out of it?
There was no sound in the pre-production model that I drove. Just like any electric vehicle, it was silent, which is good for some people. You might enjoy that. They did tell me they have something up their sleeve, and that in the fall when they release the Super RST maxed out version of this truck, there will be something special in terms of auditory, vibration. So we may hear some sound, but they wouldn't tell me what it was.
Okay, well, if you're watching on YouTube, then you're seeing some great images from your sort of beautiful fall day driving this thing, Matt.
Wait, did you actually get to drive, or did they not even let you?
Can I ask Matt a question?
No,
I did not.
They didn't let you drive. What happened with that?
So no normal mortals are allowed to drive it yet. The chief engineer, Nicole Kratz, she drove me around in it, and I was happy to have her piloting it. I could tell a lot about the handling and the suspension with the way it soaked up the bumps. There was no body roll like there is in my truck. I just got the new ZR2 with a 6.2-liter V8, but it's a very different experience.
Girls can drive, huh, Matt?
Yes, women can drive quite well.
What is going on here?
Matt and I co-hosted for a long time, so I have some fun with him. Hey, tell us about your interview, though, with the GM president.
So it was really interesting. First of all, I'm a huge fan of Mark Royce and Mary Barra. They make an incredible team and have for years. So I got to ask him a number of questions about working here, which was fun. You can listen to that on the digital release. But in terms of the economy, I thought it was fascinating. You know, we got all these warnings from the automotive industry. Yesterday, CarMax, I think it was yesterday, was really disappointing earnings, and demand was down. Prices are too high for consumers. But he said they haven't seen that at GM now. They have had a fantastic quarter. We're going to see the numbers in a week or two from GM that should confirm that. But he said consumers still are lining up for new cars. There's still a long wait list. The inventory is very low. So they have a big order book that's deep into probably next year. Right. That's the good news, right? The bad news is that inflation hasn't turned over. You saw that, I know, in the PCE number this morning, but I thought it was interesting from him as well. I said, listen, have you seen prices come down for the input costs, the raw materials, the stuff you have to buy to build these cars? And he said, no, we haven't seen that yet. They're still going up.
Well, that interview you did with Mark Royce, GM president, was incredible, and we want to share a little bit with our audience. Check it out, everybody.
The demand is there. I mean, we are selling every single thing that we make, and we're selling it deep into the pipeline. So our dealers have really done a good job of being able to show people what the truck or whatever the product is that they want, and then when it's built, and then when it's coming, and that'll just get better as the chip piece of this begins to level off and be more consistent.
Of course, that was General Motors President Mark Royce talking with our own Matt Miller earlier. Matt, what else stood out for you for that conversation and just kind of your experience? You know this world so well. It's such an important indicator of the U.S. economy and certainly the U.S. consumer.
Well, he did say that the chip problem is getting a little bit better, and he does see a light at the end of the tunnel. He thinks the fourth quarter is going to be much better for that and for the supply chain issue. But I asked him about the economy because, you know, there's so many recession warnings. I don't even have to give you any detail about them. And he said they're ready for a slowdown. You know, they have made changes over the past 4 or 5 years so that they can be more nimble and they can make the cost cuts that they need to if we do get into a deeper and longer recession.
Matt, was that a moped that just drove by? What was that noise?
No, that was like, that was a late model, I think, Chevy Chevelle with straight pipes. Standing around here, you have all of the workers getting out for the weekend, right? And a lot of them are testing the new Corvettes, the new Silverados, the new Cadillacs, and so they're showing what they can do here on the street as they peel out from the end of a long workday.
Well, it's such a cool place to be, right? It is where they check it out, everything that they've been developing and putting out there. But, you know, Matt, it just is reminding us of the big pivot that Mary Barra and team are doing when it comes to EVs and just kind of where the car industry is going.
Yeah, I don't think a lot of people on the consumer side or on the business side really get how big this Ultium platform, the Ultium project is. That's their battery technology, and it basically becomes the frame of the car in a sense, right? The old Chevy Silverado was body on frame, all the best pickup trucks are, but this is like body on battery, and then they mount kind of subframes to the Ultium platform. They can do also so many other things with this Ultium project, so I think that's really the thing that Mark was most excited about in terms of the future for car production.
All right.
There's a big Harley right over there that you could probably hear. Ooh, that's the Milwaukee 8 with the 114. That's big inches.
It reminded me of my dad who used to look up in the air and he could identify the planes just by looking up. I just want to know how big your car wardrobe is, Matt. This is really important for everybody.
My car wardrobe?
Yeah, come on. You don't wear that jacket around here on air.
This is an exact replica of a 1943 Roughwear A2. The contract number was 27752. Eastman Leather makes these things out of horsehide, and they're absolutely gorgeous.
And they think women are high maintenance. We love you, Matt Miller. Get home safely. But
I'll give you a call, Matt. I had some questions too. It's okay.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So ask me what I'm doing.
What are you doing? What are you doing tonight, Carol?
Well, two things. I'm actually looking at this pizza place I love, and you have to order like 2 or 3 hours ahead because it's like...
Really?
Oh my God, it's crazy. It's really popular. And I'm marking my calendar because there's a really special program starting tonight.
Ooh, that's really exciting. 8 o'clock tonight, Crypto IRL. Katie Greifeld and I anchor it, and it's premiering tonight, 8 p.m. on Quick Take, 8:30 on Bloomberg TV.
Everything you want to know about crypto.
Yeah, we're going to talk more about it in just a few minutes. Mark your calendar, though.
I am.
Okay,
Get ready,
thanks for
everybody.
watching. I appreciate
I'm setting
that.
an alarm for tonight.
Doug Krisner,
Are
I'm
you
going to put
setting
you on
an
the spot.
alarm? Are you going to set
Okay,
an alarm?
yeah, Bitcoin, you want to know the Bitcoin quote?
I know.
Yeah, we do.
19,459.
We want to know if you're setting your alarm for tonight to watch this.
For what?
Tim's show.
Oh, yeah, right. Oh,
Are you listening,
yeah. No, I
Krishna?
forgot it.
Come
Yeah, no, I got it.
on.
I got
Come
it.
on.
Oh, man.
That was a joke. Come on.
I love you, Doug Krisner.
I love you too. So we finish at session lows today in the equity market with the S&P and the NASDAQ each down about 1.5%. The Dow was off about 1.7% today. I think it's safe to say that there is still a lot of angst in the market about the Fed committing a policy error. You look at what we had today, the latest reading on inflation, which happens to be the Fed's favorite measure. This is the Personal Consumption Expenditures Price Index. It was up more than expected in August, rising 0.3% from July. So a number of strategists now are really talking about a policy mistake and severe consequences. Yes, you can focus on recession, but what about the possibility that we could see some kind of financial instability? The bond market was up in yield today across the curve. At the short end, late trading, we have a 2-year popping in yield by more than 6 basis points to 426, a 10-year at 381. Yes, it's the last day of the quarter, so you're going to get some final or last-minute adjustments to portfolios. That's also a factor. But I want to say before I go, look at shares in Apple today. Yesterday, we were talking about the Bank of America downgrade and the warning of weaker consumer demand for Apple's popular devices. Over the last 2 days, Apple has lost nearly 8%. That's all I want to say. I'm Doug Krisner. That is your Bloomberg Business Flash.
And you're going to set your calendar.
And my alarm.
And your alarm for tonight. Just saying.
Thank you, Doug.
I'm alarmed you're asking me to set my calendar.
Come on, Krisner.
You got to keep her honest, Doug. I appreciate that.
So talk about this program and
All
this
right.
series of programs, actually, which is really about, a new part of the financial markets, right? And a new part of our financial world that we're all still trying to figure out.
Yeah, we've got a new show on Bloomberg Quick Take. It's called Crypto IRL. It airs weekly starting tonight, 8 p.m. on Bloomberg Quick Take, 8:30 on Bloomberg TV. It's always going to be online at bloomberg.com/QT. And what we do in each episode is we take some big question, some big topic, and we interview a couple people about it and really dig into it. The first episode that we have is really all about where we are right now and how we got here. I mean, $2 trillion in crypto wealth wiped out in just a few short months. People lost their life savings. So what we try to do is really in the first episode dig into where we are, how we got here, and then what does the other side look like?
There was this really grim time a few months ago when things were crashing. Message boards were filled with people, anecdotes of people who lost everything. Our colleagues here at Bloomberg published a story about people who lost everything with Voyager. I mean, there were people who were talking about self-harm in these forums. And I'm just wondering what we've heard from the industry over that period of time.
I wouldn't say there's been a ton of self-flagellation or even kind of explicit, whoops, our bad. It's much more around, well, one, a lot of people are getting sued, and when you're being sued actively by thousands of people, it is perhaps against the advice of counsel to be like, well, we made mistakes, because that would be appearing to admit guilt of some kind.
Makes sense.
But I also think there's a nihilistic streak in crypto that suggests that, well, you should have known what you were getting into. Like, how come you invested more money than you could afford? That's on you. If you were margined and leveraged up to your eyeballs, that's on you. We didn't tell you to put your life savings in crypto. And I do think that's a problem for the industry, because it's the kind of rhetoric that regulators do not seem best pleased by, because it reminds them of things like the earlier days of sports betting and gambling, before those were recognized as, having potentially addictive properties, and the messaging around that really had to change. So I do think there has been an insufficient amount of contrition relative to the amount of boosting that there was by a lot of these folks. What's happened instead is people are just like deleting tweets, taking down YouTube videos, being like haha, just kidding, JK. And I don't think that that is necessarily endearing themselves to the people who did lose everything. But again, there's always a new buyer, right? There's always somebody who's coming in for the first time, and I worry about that new buyer.
That voice you heard right there, Stacey Marie Ishmael. She is managing editor for crypto here at Bloomberg News. Katie Greifeld, who I co-anchored this with, and I spoke to her for part of the show, and then also with Meltem Demirors, who's the chief strategy officer over at a fintech called CoinShares. She's somebody who's been in crypto, I don't want to say since the beginning, but she was telling us she bought Bitcoin at $150.
And still has it.
Yeah, I tried to get her to tell us how much she has.
Yeah,
she said,
what?
Who are you, the IRS?
Oh, really? Oh, really?
You'll have to watch. It was pretty good, a pretty good exchange.
I mean, you do think about when she was, Stacey was talking about, no one told you to put all this money in, in terms of the losses and stuff. And, do we liken it to .com or something where nobody necessarily told you to put all your money and chase all this stuff? Like, how do we think about it? I mean, part of it is really, it's a new technology, too. It's not just another new stock that might have some risk to it. It's another new, potentially financial infrastructure and system. I think potential is the key word there, and I don't want to give too much away about future episodes that we have coming up. We've shot a few of them already, though, because these aren't live, right? These are the types of things that take a while to produce. And we're about 5 episodes in when it comes to shooting of an 8 episode season. But we did speak to somebody who used to be at the SEC for a later episode, who really had nothing good to say about the technology or about the actual currencies that are built on this technology. Why so negative, regulators?
Well, this is a former regulator, I should say, and there are some regulators who are on board. But this particular individual doesn't actually see a use case for it beyond sort of the greater fool theory. Kind of what Stacey was talking about at the end of that clip. They're, something that relies on someone else to come in and buy it at a higher price.
And you do wonder, is it some grand experiment, right? Interesting, cool, will have its moment. It's certainly a lot more momentum, right, than it had a few years ago. Yeah, that's a big question we tackle as well. So we talk NFTs, we talk energy, and we talk about sort of the case for and against. And it's interesting. Remember when the big banks wouldn't even touch it, and then they've been much more embracing of it. They have, but I mean, you hear Jamie Dimon repeat the same thing that he said, over the past few years. I guess it's like, clients want it, so they provide it. Yeah, it's interesting. I do wonder how this will play out, how the textbooks, quote unquote. By the way, we tried to get Katie Greifeld in here into the studio to talk about this with us. She's counting her crypto? No, she got here at 2 a.m. today for Bloomberg Surveillance Early Edition, so she was allowed to go home a little early. All right, she's been certainly a busy critter. When can we see it? Tonight, 8 p.m. on Quick Take, and then 8:30 on Bloomberg TV. All right, incredible stuff. It looks great, it sounds great, and it's really an important topic of our time. All right, right now, let's get back to world and national news. Denise Pellegrini is on it. She's in our in our New York newsroom. Forgive me.
Hey there, Carol and Tim. Well, Hurricane Ian, it is causing flooding in South Carolina this hour, and President Biden is eyeing the devastation it left behind in Florida.
The situation in Florida is far more devastating. We're just beginning to see the scale of that destruction. It's likely to rank among the worst of the nation's and the worst in the nation's history.
Biden, meantime, promising the federal government will pay for Florida's recovery. Rebuilding could take years. Governor Ron DeSantis.
The power is a big issue. There are people that are working. I think Lee and Charlotte have about 15% restored. There's going to be able to be some more restored likely in the relatively near future.
And some parts of Florida could be without power for months. President Biden calling the leaks on the Nord Stream pipeline in the Baltic Sea a deliberate sabotage. NATO Secretary General Jens Stoltenberg wants an investigation.
We support also the efforts of, which are ongoing efforts of investigation to reveal the facts and to determine who was behind these attacks.
And Stoltenberg speaking after Russia earlier today annexed Ukrainian territory. And the federal government adding another $1 billion to help Americans heat homes this winter. Some utilities warning heating bills could surge by 40%. Could also see price hikes and shortages on electric blankets, guys. So Carol and Tim, either get your electric blanket now or get ready to huddle together with someone you like a lot this winter. Global news 24 hours a day. I'm Denise Pellegrini. This is Bloomberg.
You know when they talk about a 3-dog night? Well, I have a 2-dog night. That's why I have my 2 puppies. You just cuddle when it gets closer. My husband too, but the puppies are like, they just like press into you and keep you warm.
Kind of does. I don't know.
What?
People are listening to us worldwide around the country, but here in New York, it really is starting to feel like fall.
Oh, totally. You can feel it in the air. You know,
It's my
you hear the
favorite
leaves
time of
just-
year.
It's so beautiful. Autumn in New York. Maybe we should write a song about it.
Maybe it's already been written. I don't know.
Maybe. All right, we've got something old, something new. Something old, JP Morgan Chase starting to phase out an offering far more associated with old-fashioned bank branches than today's smartphone apps. We're talking about safe deposit boxes.
I thought we were going to talk about Hermes bags.
No, I told you.
Oh.
I know.
Did
I know you're
was
thinking
I
about
not
your
paying
crypto show.
attention?
We were going to do 2 stories because
Okay,
they're
I'll
both
start.
kind of quirky.
Okay.
Well, all right, so let me do the safe
You can
deposit
do this
boxes.
one.
Get ready for the Hermes bag. All right, the New York-based lender no longer allows customers to rent new boxes. If a Chase Bank branch is shut, its safe deposit boxes will be closed as well, and their holders will not be able to open a new box at another location. A spokesman saying we made a business decision to stop offering new safe deposit boxes as of December 2021, but that doesn't affect current customers who have boxes.
I have a safe deposit box.
Do you?
Yeah, I do. And the only time I remember that I actually have one is every year when I'm charged $83
For the year?
for the year. I don't even know what's
Do you have
in
anything in it?
Yeah, I think I got like an extra passport in there in case
that
I
what
need to, you know,
Hit the road,
get out
Jack.
of here.
Hit the road, Tim.
Exactly.
All right, let's talk about the Hermes Kelly bag fetching a record price at Sotheby's. The latest evidence that rare luxury items are increasingly seen as stores of value by investors. The Himalaya Retorn Kelly
If you
25
can't
bag
pronounce it,
sold.
you can't afford it, Carol.
Sold for €352,800. That is more than $346,000 US.
Yeah,
What's it
crocodile
made of?
crocodile skin. Yeah, in mother of pearl white, reminiscent of a snowy mountain landscape, sold for almost 3 times Sotheby's pre-sale estimates. Wow.
I mean, yeah, these are the bags named after Princess Grace Kelly. She was photographed carrying one in 1956. Legendary. And apparently this one legendary, too, for the price. What are you thinking?
No, I'll take 2.
Yeah, put that in the safety deposit box.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So the stock market was in retreat today. A lot of weakness among consumer discretionary stocks, notably Nike, whose shares were down more than 13%. Seems as though a glut of unwanted merchandise eroded the sportswear maker's profitability. And Carnival Corp shares off more than 23%, falling to their lowest level since 1992. The world's largest cruise operator reporting disappointing occupancy for the third quarter. That ended August 31st. Generally speaking, the market was defensive the entire day on the notion of higher interest rates and the possibility not only that the Fed is going to create a situation where we do not have a soft landing, but maybe at the margins that there is a little bit of financial instability, particularly in credit markets. We saw a move up in yields across the curve, particularly at the short end. In late New York trading, we've got a 2-year at 427. We're up about 8 basis points right now. A 10-year at 382 with a gain of around 4 basis points. The Dow Industrial Average today down 1.7%. S&P and the NASDAQ comp each weaker by 1.5%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much for the update, Doug Krisner there. Well, we're going to finish up the week with Nate Faust, who is the founder of Olive. It's, of course, an e-commerce business. The goal is all about reducing waste from online shipping. It's a really interesting company. I feel like so appropriate for our times. And, of course, Nate, as you know, is the co-founder of Jet, which was sold to Walmart back in 2016. $3.3 billion was the price tag on that. And at the time was the largest U.S. e-commerce acquisition for its period.
And that wasn't his first rodeo either.
No.
He was over at Quidsy earlier with Mark Laurie and the crew from Jet as well. So Nate knows a thing or two.
We could just do something, right?
He knows a thing or two about e-commerce. Yes. Nate, good to have you with us. How are you?
I'm great. How are you guys, Carol and Tim?
Yeah, we're doing really well. Tell us about Olive, because I got to tell you, I was looking at what you guys do online, and I was thinking to myself, this needs to happen, because I don't know about you, but how many cardboard boxes and packaging waste are we just producing each and every day as individuals? Because it's just mind-boggling with the rise in e-commerce.
Oh, I mean, tell me about it. I mean, that's really what started this whole journey, was just the frustration of dealing with breaking down boxes and all the trips up and down my driveway, and the epiphany that this isn't how it has to be. It's, incredibly inconvenient, both for customers and for the environment. And so, what we've built at Olive to address that is really a closed loop system where we partner with brands and retailers to deliver their customer orders in reusable packaging that we pick up from their doorsteps, along with any returns. And to really further that circularity model, not only do we eliminate all that packaging waste, but when we pick that up, consumers also have the opportunity to drop in used clothes that we then sell on their behalf, so that we keep them out of landfills and increase the circularity of goods and multiple uses, along with the circularity of packaging.
I love this circularity. It's a really important concept. Nate, I think it's been more than a year or so since we last checked in with you. So tell us about, here we are more than a year later. What's the update in terms of your business, the volume, the pickup, the usage? I'd love some insight on that.
Yeah, absolutely. I mean, since last time we spoke, we did make a pretty significant shift in our business from a business-to-consumer model to a business-to-business model. Previously we had an offering where you could basically order from a bunch of places. That stuff would come to us. We'd combine it for you into a single weekly packaging and reusable packaging. But we actually had a lot of our early brand partners saying, oh my gosh, our customers love this. Could you just provide this experience directly for us? And so we pivoted to a B2B model where now we work directly with brands, and Olive waste-free delivery is a ship method that shows up at checkout. And, we're still early on, but, we're doing several thousand deliveries and pickups a week just in the New York metro area, and, a smattering of other pickups across the rest of the country, but with a big focus on the New York market at the moment.
Hey, Nate, how do you scale this? How do you get it beyond fashion and get it beyond clothing?
Yeah, so it really just comes down to volume, and the greater scale of the supply chain, the greater the ability to move through products that might have, slightly lower resale values. But it really just comes down to synchronizing that delivery and pickup such that there's no incremental cost getting those used goods out of people's homes and up for sale in secondhand markets. But it works quite well for apparel, given the value of apparel and the sort of relatively low weight of apparel. But this model, this circular model, I mean, this is really where commerce has to go. I mean, we can't continue to manufacture everything that we do and get single uses out of it.
So have you had a conversation with Amazon?
No, I mean, that's obviously the biggest e-commerce player there is. I would love to one day be able to address all e-commerce categories, but right now we're more focused on mid-sized apparel brands.
I was being a little silly, but I do think about, and as consumers, I increasingly am thinking about, I don't need to get everything tomorrow. I don't need to get everything in 5 million boxes. I mean, come on, world, like kind of wake up. And I do wonder, as we increasingly look at the impact of, another hurricane, extreme impact in terms of our climate. And you guys are about, I know last time we talked about, the last mile and lowering carbon emissions. As you guys move along, how are you measuring that you are indeed lowering carbon emissions by what you are doing?
Yeah, so we're actually in this new model putting together the data so that we can perform a study similar to the one that we had started in the prior B2C model, where that was more about the consolidation and the reduction of the sort of last mile stops. And in that first version, we weren't actually eliminating a lot of the packaging because we were intercepting it and consolidating it. In this new model, we're eliminating the packaging, and we're also, with the driving the circularity of the goods, having a significant sustainability impact. And so, we're getting close to kicking off that study to really measure our end-to-end impact.
Nate, would a company like Amazon ever be able to do what you're doing? Because most of their stuff goes one way. And we're talking about consumables more so than, clothing.
Yeah, I mean, honestly, Amazon's a really talented company, so I wouldn't want to say there's anything Amazon couldn't do, but just moving to reusable packaging could be, fairly tricky given a massive, global supply chain that is built around and has, who knows how many tens of billions of dollars of capital put into facilities that are all about sending out orders in single-use packaging.
Yeah, it's really interesting, and I do think this is such an important nugget in the wheel as we try to figure out climate change and how to do it better, as we are, many would argue, increasingly kind of running out of time here in terms of slowing things down or reversing it. Nate Faust, thank you so much. Stay in touch. Love to hear the updates as you continue to shift that model. Founder of Olive, co-founder of Jet.com, on the phone in New York City. So much. What a week. Remind everybody about your crypto show.
Tonight, 8 p.m. Wall Street time on a Quick Take, and then 8:30 on Bloomberg TV. And we got a redhead, Intel's Mobileye Global filing, Carol, for an IPO. The news just doesn't stop.
It's been a really full week. Hey, everybody, check out our weekend podcast and broadcast on radio, and stay safe.